Hello and welcome to this segment of the video training for the Annual Plan 2012-13. In this section I'm going to cover service developments. Service developments are very similar to transactions, but they don't involve the transfer of services from another NHS body. They are meant, the separate sheet for this developments is meant to capture step changes in services you're providing, and as such it works in a very similar way to the transaction sheet, but we wish to keep them separate to understand the effect of transactions separately. Hence the service development sheet looks very similar to the others. The top section is a summation of what goes beneath. Beneath there are sections for adding both recurrent and income and recurrent costs, and there are the opportunity to use 7 different schemes, but that doesn't mean you need one or more. It's entirely at your discretion. It's entirely your plan. For each scheme we need a name which will allow us to recognize the text description in your strategic plan, and then a set of figures. Now the figures work in much the same way as the transactions, which I've covered. Effectively, you have the opportunity of recognizing income in any or all of these areas. We've taken a policy decision not to conceal areas which may not be relevant to you. For instance, acutes can see mental health, ambulance can see all the others, community can see all the others. In the past we have tried to hide the appropriate areas from different trusts, but then we've been caught out where acutes have community and mental health have community trusts services, and so we're not going to try and be clever. You know what your business is better than ours, and you can fill this in at your discretion. Just to say that revenue, as throughout the template, an increase in revenue is positive. An increase in expense is negative. We would expect, if you're introducing a new service, to be increasing your costs and increasing your income. For instance, if we went and put in a new service that started halfway through the year and generated income, we would expect there to be associated costs, whatever they are, in various areas. One other thing to mention is that while you can see 4 different columns for the 4 different quarters, there are actually 12 different columns there for different months, and that is to allow the same template to be used for trusts that are planning on a monthly basis. So if you drag across, you will be generating the same number in various monthly columns, so please do not do that. Otherwise you'll find the totals that you see here will not actually agree to the totals that you see on the face of this, because there will be extra hidden columns. Right, so this effectively shows you a 4 million increase in annual income recurrent, and a 2.6 million increase in annual expenditure. And this acute elective revenue will feed through to the acute elective plan sheet, and you'll see the effect of service developments. Now this is a sheet which allows you to split into tariff and non-tariff. It's assumed to be at the top section, tariff, but if it's actually non-tariff, then there's an equivalent effect of service developments here. So if you move it, say 3.5 million here, sorry, that should be 3.5, you'll find that it knows that the total should be 4, and therefore 0.5 is what's left here. Similarly, in the expense areas, we put in a pay cost, and you'll find that the pay cost has been transferred from developments. This is a manifestation that for the pay and workforce sheets need to agree. If I go back to the developments, you'll see the sections are identical. The costs and income are recurrent, so that unless you are planning for an increase in the second year, you do not need to put any figures in the second year. If the transaction takes place in the second year, then there presumably be no figures in the first year set of columns. I hope that assists. Thank you for watching this.